Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, before we went on air, we were saying it's been a pretty good year so far, touch wood, although we're entering the sell and may go away season. But let's start off with one of the more recent trades for the portfolio, not the most recent trade, and that is Aspen. You're still long of this one.
Yes, still long of it, and I know we've spoken about this share every week on the show, I think for 4 weeks in a row now, but it's a trade that we entered 2 weeks ago for the show, and it's doing well for us. If we just quickly revisit it, the chart of Aspen is up on the screen at the moment, and what got me interested were a couple of things. First of all, we've got this long-term uptrend which came in at around about 365, 370 Rand, that sort of area. That trend actually goes back much further than what I'm showing on this graph. I mean, this is only 1 year worth of trading action. It actually goes back about 4 years. So it's a very strong upward trend. But recently we've seen this weakness in the share price, and what that has been caused by was GlaxoSmithKline, who is a very large shareholder in Aspen, reduced their stake in the company from 12% down to 6%. And that created a short-term overhang of stock. You can actually see the big volume spike over there, and that represented that big sale of the Glaxo book build going through. Nevertheless, the share price traded down to this long-term support area, and it reversed up very nicely off there. And we used that as an opportunity to go long of 350 CFDs for our portfolio. We bought them at 376 Rand, and we used a stop loss here at 359 Rand. And I'm looking for a target of 420. So far, so good. We're trading up at about 403 Rand today. So looking good. Look, I may very well look to perhaps take that profit a little bit earlier. I was always looking for it to rally to the underside of the 50-day moving average, and that 50-day moving average now comes in at around about 410 Rand. Okay. So there's a chance that I might actually bank the profit a bit early, but I will take it as it comes and I'll monitor it. So far, so good, and the trade is working quite nicely for us. Okay.
And then the second one that I know you want to review is last week's trade, and that was a long position in Reinet, which also looks as if it's doing what you wanted it to.
Yes, it is doing what we wanted it to do, albeit quite slowly, but it is working. And if you have a look at Reinet in the past, when it's pulled back to these oversold extreme levels, it doesn't just shoot up in a hurry. You can see each of these previous times it's taken about 2 weeks or so to actually find a footing and then start moving up. So I guess we're seeing the same thing happen here again now.
Although having said that, I mean, look at the charts there. There is always seems to be a consistently strong jump at a certain point.
Absolutely, and I think that's what we're looking for here, really. And I'm still confident that we'll get that. If we have a look, that uptrend came in at about 24.50 on this stock. Last week when we did the trade, we also looked at this in combination with the share price of British American Tobacco, because obviously the two shares are very closely correlated with Reinet holding a substantial stake in British American Tobacco. So there's obviously a natural correlation between the two share prices. We have begun to see the price of British American Tobacco moving up, and I'd expect to see Reinet do the same. So we went along and we bought last week, we bought 6,500 CFDs for our portfolio at 24.60 Rand. We got a great price there actually. We got fairly near the turning point at the bottom. Stop loss 23.90 Rand, and I'm looking for a target of around about 26.50 Rand, which will basically take it up towards these prior highs again that we saw towards the end of last year and earlier this year. So I'm happy to stick with this trade for the time being. You can see the stochastic is just beginning to turn up off oversold levels here. So all looks good to me, and no reason not to stick with this trade for the time being.
And no reason not to stick with the market overall. And I know that the top 40 is the next chart you want to bring up. I mean, we've had a pretty good couple of days. The record on Friday, another record yesterday. Yeah. Couple of shares that took us there, so it'll be interesting to see where we close with Naspers under so much pressure today. But nonetheless, it seems the resources stocks have come in a little bit stronger. What do you think is going on, Garth?
Yeah, well, I want to just revisit this chart of the top 40. And again, this is a chart that we did show last week. It's a line chart of the top 40 index, as opposed to the normal bar chart that I normally use. I just felt that the line chart here is a lot cleaner to see what's going on. And what's very evident is this overhead resistance at about 47,200 on the top 40 index. And you can see we bumped up against that in July last year. We bumped up against it a few times in February this year, and then we consolidated. We consolidated in what's almost like a small channel, or you could perhaps call it a bull flag type of setup. And last week on the show, I said that what I was watching for was a potential breakout to the top of this flag type structure to go and then revisit the previous highs at 47,200, and quite possibly to then break to new high territory. We've got up to that 47,200 sort of area. We've traded around there. We are pulling back a little bit today. But, you know, all told, this market does still look to me as if it could have another go at the upside to actually go and try and make new highs now. And also, if you look at our stochastic oscillator, you know, there was positive divergence over the last previous couple of weeks, and it's beginning to move up. It's certainly not in overbought territory yet, so there's definitely room for our market to still go a bit higher, I do think, from these levels. I mean,
to some extent, the unknown is going to be what companies report, and US earnings season has just begun. And there is expectation that it's not going to be great, but if it's better than expected, do you think that's going to have then quite a positive kick effect for the market?
I think that's right, and that's kind of something that I think is definitely worth watching. When you alluded to the US earnings season, so we now started to see first quarter earnings coming through for US companies. And over the past couple of weeks, we've actually seen analysts scaling back their numbers quite dramatically in the US. So to the point now where the expectation is that S&P 500 earnings on balance are actually expected to show a decline of -2.9% on average. So I mean, surprising as that is, because the US markets are very close to all-time highs, yet we've got earnings actually showing declines. So it's quite an interesting paradox that. But the thing is that we've seen this in the past where earnings estimates get scaled back. And then what it means is that the market prices in a sort of a bad scenario, as it were. And then if earnings come out and they're not as bad as what the market was expecting, well, then, of course, that's viewed as good news, and that sees the market bust into new high territory. And if I look at the S&P 500, I don't have a chart of it with me now, but that market also is looking very much on the cusp of breaking into new high territory. And I think if we do have any positive surprises in terms of US earnings, that could very well be the kicker that takes the American markets higher, and then, of course, we'd most likely follow.
Yeah, of course, the opposite side of that could be earnings coming worse than expected. So, you know. Sure,
it could go either way. You know, I think also a big factor that people are obviously concerned about is the fact that the US dollar has been very strong, and that strong dollar will have impeded US earnings, certainly in the last quarter where the dollar has been exceptionally strong. Yeah. We'll see how it works out, but I do think the markets are primed for, you know, potentially negative earnings. And if they come out not as bad as what the markets expected, then there's a chance we see a spike to the upside.
Yeah. Okay. So that's sort of the context in which you'd like to introduce this week's trade. You've been very active this year so far, Garth, almost a trade every week. And it's a property stock resilience, which I must say I wouldn't have automatically thought would be a sort of a trader's kind of share to pick.
Yeah, it is an interesting pick. We don't often trade the property stocks on this show, but this one definitely tweaked my interest for a couple of reasons, and I'll show you why. You can see the chart of it over there. The stock has been performing very strongly this year, and you can see certainly since January this year, it's been trading upwards in this very nice, neat upward channel. And there's support that comes in around about sort of 102, 103 Rand over here at the bottom of that channel. What's also very interesting to note is this positive reverse divergence. And this is a setup that I often like to see, because what it's basically telling you is that even though the price action is making a higher low this time than what it did on the previous pullback, your stochastic oscillator is now more oversold than what it was in the previous attempt at pulling back. And that often is almost like a slingshot type of setup, which then propels the share price higher in the direction of the trend. So what I'm looking for here is basically a sharp move up towards the upper end of this channel again, or up towards about 110 Rand per share. And what also gets my interest with this one in particular is that it's actually one of the lowest yielding property stocks, which implies that its price is very, very high on a relative basis. But because of that, it's also a very commonly shorted property stock. So when you have a situation like that where a stock is heavily shorted, but the price doesn't really come down, it does open the way for potential short squeezes. And we've seen this happen with Resilient a couple of times this year so far. And I think that we could potentially be on the precipice of another short squeeze again if the guys that have shorted this stock don't, you know, get their payday. it's very possible that we could see it pushing to the upside.
It is quite curious, the kind of stocks that attract the short sellers who then don't get it right.
It's the old favorite, I guess. You want to short the shares that have gone up the most. It's silly thinking. Ultimately, shares that are really going up and going up to new all-time highs very often, it's because they've got a lot of strong momentum behind them.
Yeah.
There's lots of buying interest. You don't want to stand in the way of that momentum. But yet, we see it time and time again with stocks that have run very hard. I mean, Naspers as a classic example. People love to short Naspers, and the market floor is littered with people that have shorted Naspers and been literally killed in that share.
Although, having said that, today they're probably doing okay.
Well, yeah, but I doubt that. Yeah.
But going back to resilient, God, so you have entered a trade for this already?
I have. I've gone long at 104.20 with a stop loss at 102. Let's quickly unpack the details here. Long at 104.20, stop losses at 102 Rand. This trade was entered yesterday, by the way, being Monday. We published this on traderscorner.co.za for subscribers. The risk per share is 2.20 Rand. The risk that I'm taking is very small in this case. I'm only risking 0.75% of my capital on this trade. We've got 315,000 Rand at our disposal, so 0.75% of that is 2,400 Rand. And you might say, why? Well,
yes.
Why? The reason actually is that very often when I go into trades, I stagger my entry. I'll break it up into 3 or 4 different entry points. And what happened with this one is I only got a third of my entry, and then the share price started to run away from me. And I thought, okay, well, I'm not going to chase it. I'll just stick with a third of my position. That way, if I'm wrong, now I'm only wrong on a third of a normal trade size. And if I'm right, well, of course, I'm not going to make as much money. But we've got other exposure in the market as things stand at the moment. So I'm not uncomfortable to have a small exposure with this one.
Okay. And then, Garth, your target on resilience, what would it be? Or just how many CFDs have you actually bought there?
First of all, so to get to our position size, we take the capital risk of 2,400 Rand and we divide it by the risk per share of 2.20 Rand. And that gives me 1,090 shares. I've rounded it down to 1,000 CFDs. That's actually the trade size that I initially went into when I was staggering my entry into this trade. My target's 110 Rand. My risk to reward ratio, therefore, is 1 to 2.64. And the total exposure that we've got on this trade is 104,000 Rand.
Okay, so if you were to stagger yourself in, would you still have a smaller than usual position on resilient? 2% is generally the maximum that you take in any one given time. But because you've got a couple of open positions and you've got that put option structure, which has been paid for already, would you be... would you cap yourself nonetheless? I
think in other trades I'd still be willing to go for a bigger risk. This one as I say, I didn't get my full allocation initially and I didn't feel like chasing it. And I also thought we've actually got quite a bit of exposure anyway with our Aspen trade and our Reinet. And we're now adding a third position, and then we've got our option structure. So, you know what, I generally don't like to have more than 4 open positions at one time. So this means now we've got 4 open positions, so we're kind of at our maximum. And I don't feel the need to be pressing too hard with anything at this stage.
Okay, well, let's see how those 4 open positions are working for the portfolio.
Yeah, well, here they are. So our put option structure is working in the background. We've paid the premium of 2,500 Rand for that. Aspen is up 8,750 Rand as things stand, which is looking good. Reinet is up nearly 4,100 Rand for us. And then this resilient trade we've just entered today, so there's no mark-to-market profit or loss there yet. Our portfolio is sitting with 316,000 Rand in it. So that's up 26% for the year to date. So we're at an all-time high, well, for the year, a high for the year, which is great. And looking good.
Oh, indeed it is. And Garth, next week we're not going to have a live show, but just tell us what we're going to be focusing on next week.
Yeah, I'm going to be away. So what we've done is we'll pre-record an educational show, and I'm going to be looking at 4 high-probability trade setups to look out for. Basically 4 of my favorite trade setups that I typically like to trade. I'll give a breakdown of each of those and how you trade them and where you put a stop loss, etc., etc. So it should be an interesting show, definitely one to keep an eye on.
Definitely. Okay, Garth, we'll leave it there. Thanks as always for joining us. Enjoy your week off. Garth McKenzie, of course, is founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.